Hello everyone, I welcome you in the virtual classroom of business environment. We are discussing unit number 3, Indian tax system, and up till now we have completed canons of taxation, and now we are moving towards direct tax and indirect tax. Let us first see the direct tax. The name itself suggests that the tax which is directly charged on the taxpayer is known as a direct tax. If we see the definition from these words only, then direct tax is a tax which is charged directly on a taxpayer, and indirect tax is a charge by one of the party to the taxpayer. Now let us see in detail. Direct tax is charged on income, salary, or profits of an individual or corporates. See, direct tax is chargeable only on the three things. Which are the three things? That is income, salary, or profit. In a way, this is only one word. Whether salaried person are there, then they are having salary, or if businessman is there, then they are earning profit. So whatever the tax is chargeable on the salaried amount or on the profit amount, that is known as a direct tax. In case of direct tax, the burden can't be shifted by taxpayer to someone else. These are largely taxes on income or wealth. As I told you earlier that direct tax is those kind of taxes over which in which we are charging tax directly on a taxpayer, means the tax bearer is the person who is paying the tax, who is ultimately bearing the tax liability is the one who is paying the tax. But the same case is not there in an indirect tax. See, there are generally three parties in the tax payment. Up till now, we have seen that there are two parties, but now I am including one more party. One party is a tax collector, generally is a government. Second party is a taxpayer, and the third party is a tax bearer. I am repeating again. First one is tax collector, that is government. Taxpayer, and the third one is tax bearer. Tax bearer is the person who really pays the tax, who really incurs the cost of tax payment. So that is a person, and taxpayer is the one who is making the payment of tax to the government. Now taxpayer may be the tax bearer, may not be. Say for example, if you are purchasing any commodity, if you are purchasing any product, in that also you are paying tax. So customer is a tax bearer, but customer is not paying tax on that product. On that product, tax is payable by producer. So producer will become taxpayer, customer will become tax bearer, and government will become tax collector. In this example, the taxpayer is not the tax bearer, so that is the example of indirect tax. But in case of direct tax, taxpayer is the one who is bearing the tax liability. Say for example, income tax is there. Income tax, whatever the tax is chargeable, it is beared by the same person only. Examples are given here: income tax, corporation tax, property tax, inheritance tax, and gift tax are of direct tax example. Then definition given by Dalton is given here. A direct tax is one which is really paid by person on whom it is legally imposed. As I told you earlier, really paid by a person on whom it is imposed means the taxpayer is a tax bearer. We are not transferring our tax liability to someone else. In case of indirect tax, producer transfers the tax liability to the customer, but in direct tax, tax liability is not transferable. Now let us see the merits of direct taxes. There are 5 merits. First one is equity, second one is certainty, third one is elasticity, fourth one is productivity. See, these 4 advantages are nothing but the canons of tax. We have seen that there are 8 canons given by 2 different economists. One is Adam Smith and second one is Professor Bastable. And out of this 8 canon, the direct tax possesses 4 canons. And the fifth advantage is developing a civic consciousness. Now let us see in detail. First one, equity. A direct tax is an equitable tax. Through it, the rich can be made to pay more than the poor. In case of necessity, the poor people can be granted exemption from the payment of such taxes. So equity means what? Canon of equity. In canon of equity, we have seen that tax should be charged more to the poor and less to tax should be charged more to the rich and less to the poor, because rich affordability is more and poor's affordability is less. So in the direct taxes are of the same example only. In direct taxes we have seen that one of the example of direct tax is income tax, and you must be knowing that in our country poor classes are given exemption from the tax payment. Then 10% category is there, 20% category is there, and 30% category is there. So highest tax is chargeable from a rich class. So that says that direct taxes are equitable. A direct tax is equitable in the sense that it is levied according to the taxable capacity of the people. As I told you earlier that the rich people's taxable capacity is more. Why? Because they are earning more. And poor's taxable capacity is less because they are earning less. And that is the reason poor is paying less and rich is paying high. The rate of direct taxes like the income tax can be fixed in such a way that the higher the income of a man, greater is the rate at which he has to pay the tax. Such a system is known as progressive taxation. When we have started this unit, in the introductory lectures only we have discussed three types of taxes. First one is progressive tax, second one is proportional tax, and third one is regressive tax. What is progressive tax? Progressive tax simply means income increases and tax liability increases. So that is what happening in a direct tax. We have seen earlier example of direct tax as an income tax. Income tax increases 0%, 10%, 20%, 30% as the income of the people increases, like 5 lakh 0%, 10 lakh 10%, 20 lakh 20%, more than 30 lakh 30%. Likewise, slabs are given in our Finance Act. So direct taxes are progressive taxation. Then second merit is certainty. A direct tax satisfies the canon of certainty. For instance, a person liable to pay income tax knows how much he will be required to pay. For that purpose, he can take appropriate steps beforehand. Canon of certainty means what? Three things must be known to the taxpayer and tax collector: whom to pay, when to pay, and how much to pay. I'm repeating again, whom, not only three but four WH questions are there: whom to pay, when to pay, where to pay, and how much to pay. Means timing must be clear to the person. In case of direct tax, you know that 1 year's tax is payable in a next year, financial year. Say for example 2018-19 is there, then tax is payable in 2019-20. So by that way the timing is known to the taxpayer. Secondly, the income tax slab is given right in the advance. You know that in India budget is declared in February and is declared in the March and is passed in the April. Means it is applicable, accessible from the April to March. So when year starts, at that time only the tax rates are given. So on the basis of that tax rate, people can know that how much they are earning, so accordingly they can calculate what will be their tax liability. So second question is answered, how much to pay. First question is when to pay, second question is how much to pay. Where to pay, they are having a designated income tax office depending on the region they are living. So where to pay, it is clear. And where to pay, when to pay, how much to pay, and whom to pay. Yes, definitely it is only income tax authority. If income tax is there, for corporation tax then the respective regional authority like corporation is there, then taluka panchayats are there. So accordingly, people know whom they are paying, though it is ultimately known as government, but which department is collecting a tax, that it should be known to the taxpayer. So these are the four questions should be known to the taxpayer: whom to pay, when to pay, where to pay, and how much to pay. And in case of direct taxes, as I have given you example, that these four questions are answered very beautifully. That's why we can say that direct taxes possesses the characteristics of canon of certainty. Then third advantage is elasticity. Elasticity simply means flexibility, changeability. If there is a room to change the tax rate, then we can say that taxes are elastic. Let us see in detail. A direct tax has elasticity. It can be varied according to the needs of government and changes in the income of the people. Say for example, the need of government is changing. Suppose government has undertaken a project for the developing a particular infrastructure in an economy, so which requires a huge amount. So at that time the government's requirement is more. So definitely government will be going to charge the higher rate of taxes. So it depends on the need of government first, and secondly on the income of the people. Income of the people greatly depends on the trend which is running in an economy. Generally, two types of trends are there: boom period and recession. In boom, the income of the people increases, and in recession, the income of the people reduces. So, in boom period, the tax rate will be more, and in recession, tax rate will be less. When the income of the people goes up, the rate of income tax can also be increased. If the income of the people falls, the rate of income tax can also be lower. As I told you earlier, that in boom, the income of the people increases, so tax rate will be heightened, and in recession, people's income falls and tax rate also falls. So that is the elasticity, means flexibility, changeability. Elasticity you can compare with the rubber. If you stretch it, it gets stretched, and if you lose it, it gets contracted. Increase भी થાય અને decrease भी થાય. Then the fourth advantage is productivity. Direct taxes constitute an important source of government revenue. Their collection charges are also low, therefore direct taxes are productive. What do you mean by productivity? As we have seen in the canon of productivity, that productivity implies that after collection of the tax, the net revenue in the hands of government should be more. Sometimes what happens that government collects tax, and in the process of collection government incurs so much of cost that revenue is set off by the cost. So ultimately whatever remains in the hand of government is a very negligible amount. So such thing cannot be termed as a productive taxation. In case of direct taxes, as there are only two parties, taxpayer and tax collector, and both are coming directly in contact with each other, no middleman is there like indirect tax. So the process becomes quite simple. The system required for the tax payment and tax collection is quite simple. So less people are indulged in the tax collection. That is why less salary is there to be paid to the staff of the tax collection, and that is why the revenue neatly come in the hands of government is in a huge amount. That is why we can say that direct tax are productive. Then the fifth merit is a mean of developing civic consciousness. What do you mean by civic consciousness? Civic consciousness means an emotion in within a people that they are the responsible citizen of the country. They are responsible for the development of country. No doubt the infrastructure will be developed by government, but contribution should be given by the population itself only. When a person feels responsible towards the developmental process of country, that is known as a civic consciousness. The civil liability of a citizen is known as a civic consciousness. By direct taxes, we can create civic consciousness within a people. How? Let us see. A direct tax increases the civic sense of the people. When the people are fully aware of the payment of the taxes, they are also conscious of the way the government spends the money. They resent unproductive or wasteful expenditure. As a result, the government becomes careful in its expenditure. So, what is civic consciousness? That when you are paying the tax, in case of direct tax, the taxpayer knows that he is paying the tax because the tax bearer is the taxpayer. So, in direct tax, when he is paying a single money, say for example, a person's tax liability is 1 lakh of rupees, and as a tax he is paying 1 lakh of rupees to the government. So when a country is developing, when he sees that very good roads are there, very good infrastructural facilities there, electricity facilities there, then he will feel proud that my money is spent on a good way, that people are having luxuries, people are having comfort in our economy. So that is a sense of proud, that we can term it as a civic consciousness. That is a one part of civic consciousness. What is second part? That when you are paying, you are becoming conscious that where my money is utilizing. If you feel that government is utilizing in an unproductive way, sometimes most of the people feel that whatever the tax we are paying is used for the corruption only, so that is an unproductive utilization of the tax payment. So people can ask to the government that where you are utilizing our money. So that also becomes government careful regarding utilizing the tax collection. They will not have any wasteful expenditure. Wherever money is required, in that area only government do the expenditure. So that is the mean of developing civic consciousness. We have seen that civic consciousness can be seen from the two perspectives. One, that it gives proud feeling to the taxpayer, and secondly, that it makes taxpayer conscious to see where government is utilizing the money. So that is all about the merits of direct taxes. Now let us see the demerits of direct taxes. There are 4 demerits. First one is lack of popularity. Second one is evasion. Third one is people's indifference. And the fourth one is disincentive to work and save. Now let us see in detail. First one, lack of popularity. First, such taxes are not very popular because the people have to bear the burden on such taxes directly. That is why when the rate of direct tax is raised, most people express their resentment against the government. Lack of popularity means what? That this direct taxes is not liked by the people. See what happens in the direct taxes, as I told you earlier, that taxpayer is a tax bearer, means at the time of paying tax, a person know that he is paying tax. See what happens, you are earning. Why you are earning? Because you want a very good life. Yes or no? So in the greed of getting good life, you are earning, and when you see that when income comes in your hand, before you enjoy it, government takes their share. So it is very pinching to the taxpayer that I am earning, I am hardworking, I am earning for my betterment, and instead of getting betterment, government is taking my income. So that is why people don't like the direct taxes. People never like to pay the taxes at all, which makes direct taxes unpopular. For instance, when the rate of personal income tax or corporate profit tax is raised, criticism from those affected becomes very strong. You know that the tax rates are declared in the financial bill, and the tax rate, if we talk about income tax, then income tax slab is there, and every year the tax rates are changing. And secondly, the corporate tax rates are there, flat 30.9% tax is payable by the corporates on the basis of their profit. So this is the figure prevailing since longer period of time. If there is any kind of change, say for example, in earlier year the exempted income is 0 to 5 lakh. Exempted income is 0 to 5 lakh, and suppose next year if government gives exempted income as 0 to 4 lakh only, then those people who are falling in the category from 4 lakh to 5 lakh, definitely they will not like the decision of government for payment of tax, because earlier they were not paying tax and now they need to pay the tax. Yes or no? And no one, and everyone knows that no one like to pay the tax. So that is why that there's income tax, wealth tax, corporation tax, and all type of taxes are lakes popularity. Then second disadvantage is evasion. Evasion means tax evasion. Tax is avoidable. It can be evaded by submitting false return. Many people try to evade income tax. You know that once government has given the figure that out of total population only 10% of the people is paying income tax. Just imagine the figure. Out of total population only 10% is genuinely paying the income tax. It is not like that 90% of the people are not earning or the 90% of the people are poor. On the other hand, we are also having one of the survey of poverty that only 30% of the people are living below poverty line. So according to this survey, 70% of the population should be paying tax. But what is the reality? Only 10% is paying the tax. Means what this 60% are doing? They are showing that they are earning less, they are filing false return, and on the basis of false return their tax liability becomes zero, negligible. Yes or no? And you know that in India most of the people except salaried person, because salaried person are paying tax at the TDS, so there is no black money for salaried person are there, but most of the time black money is created in business only. In business, you know that most of the businessmen keep two set of books of account, one which is real for them to know the real position of business, how much they are earning and how much cost is incurred, and the second one is unreal to be shown to the income tax department. And in second unreal books of account, definitely they will show the lower income and the more cost, and as a result they will pay less tax. So this becomes the habit from in India from say, decades together, that people are having two sets of books of account. They'll file the false return, and as a result a huge amount of black money is created because of tax evasion. And direct taxes are too much complicated, that there are so many loopholes. By using that loopholes, people are doing tax evasion and creating black money. Then the third disadvantage is people's indifference. It does not develop the civic sense of those who do not pay such taxes. See, in advantage, we have seen that it helps to develop the civic consciousness. But who can have a civic consciousness? The one who is paying the tax. And you know that direct taxes gives exemption to a certain category of the people, that if they are poor they need not to pay the tax, and those who are not paying tax they cannot feel the proud that country is developing because of them. In case of income tax, people with incomes below a certain level are not liable to pay tax. In a low income country like India, the majority of the people are not required to pay income tax. As I told you earlier that in India, as government told, only 10% of the people are paying tax. Actually, there should be 70%, but only 10% are paying tax. And also, if we see the developmental ratio of India, then on the basis of development, countries are divided into three categories: developed countries, developing country, and underdeveloped country. You know that India is a developing country, so there are a huge gap between rich and poor. Most of the people are falling in a middle class, and secondly they are filing the false returns, so middle class also follows the poor, falls in a poor class, and as a result most of the people are not paying tax. When a man directly bears the burden of tax, he tries to know how the government spends that money. Those who are not directly affected by burden of taxation remains indifferent as to the way the public expenditure is incurred. See, in India, you know that most of the public revenue is used in the corruption only, and even population knows how and in what way corruption does happens. But then also they are keeping quiet. Why? Because they are not the person who are paying tax. It is only 10% who are paying tax. As they have not paid a single penny of tax, they will feel that why to worry about this corruption and the bad politics in India. We should mind our business. Because they haven't paid any money, they will not care about how government is spending the money. So their behavior is indifferent towards the government, whether government is doing any developmental activity or no. They will not raise their voice. Why? Because they are not paying the tax. Then fourth and the last disadvantage of direct tax is disincentive to work and save. It reduces the desire to work and save. The rate of direct taxes are usually high. Many business ventures are not undertaken on the ground that a large part of income earned will have to be given to the government in form of taxes. Thus, direct taxes reduce incentive to work hard and save. See, direct taxes are generally huge in rate. There is 10%, 20%, and 30%. But indirect taxes are generally negligible in amount. So first of all, direct tax rate is high. That is why it provides this incentive to work hard. What people will feel in case of direct taxes, that if I will work hard, no doubt I will earn more, but from the higher salary, only a part will be enjoyable. Second part will be enjoyed by government. Then why to work hard? Yes or no? See, if people put a lot of efforts to increase the income to 5 lakh, say for example, they are earning at present their income is 5 lakh and he is working hard and increasing his income to 10 lakh. Earlier it was 5 lakh, now it is 10 lakh. According to previous scenario, his income was exempted, so he was paying 0% tax. But now, as he is earning 10 lakh, his income tax liability is 10%. So, will he like this scenario? First of all, he has worked hard, so that part is not liked by the person. Secondly, from the hard working income, if government will take the share, it is the second point which is not liked by the person. So all in all, this will work as a disincentive to work. What that person will feel? Why to earn 10 lakh? I will be happy in 5 lakh. In 5 lakh, I will enjoy. I will fulfill my all necessaries, and my income will be mine only. No one will come to ask their share. So that is why second time he will not work hard to earn more than 5 lakh of rupees. Getting it? So that is what disincentive to work and save. That is, I have told about disincentive to work. Now let us discuss about the savings. How people saves their money from their earning only? Yes or no? And on earning they have already paid income tax. Getting? After paying income tax, after fulfilling their basic necessities, they are saving a part and they are keeping in a bank as a FD, for example. Now when FD will be fulfilled, when they will be matured and you are earning interest and more amount than whatever you have paid to the bank, then on that income also government will charge the tax. So it is a double taxation. Savings is coming after payment of tax, and on savings also, when the savings will be get mature and you will earn from your savings, government will also charge from saving as well. So that is not liked by the people will feel that if I will save, government will come again tomorrow to ask their money. So why to save, let us spend it today only. So they need to pay only one time tax, not twice. So that is how direct tax works, as disincentive to work and save. This is all about direct tax. We have seen advantage and disadvantage. We are keeping our lecture here only. From next lecture we will discuss indirect taxes.